I'm generally a little bit skeptical that you'll see any sort of very significant strengthening. What I've been saying consistently is that a lot of market participants tend to jump the gun a little bit in terms of expecting the speed of any hikes to be a lot quicker than we think is likely. We expect the BOJ to actually be relatively slow in terms of moving and to be very careful about ensuring that they don't let the economy fall back into a deflationary spiral. So you've had 2 straight years where the sort of spring wage negotiations went relatively well with rather large wage hikes. Next year would be the 3rd such year if it does happen, which we do expect. And just simply psychologically, I mean, 2 data points is a coincidence, 3 data points is a trend, right? So that's probably one key date or general time of year, which we think will be significant for the BOJ to gain significant confidence that they at least have the option to move more aggressively in terms of hiking. Until that point, we think that they'll probably be quite timid. So if market participants are expecting the BOJ to behave like the Fed, we do think that that's unlikely. And so for the short term, we think that the bias will probably be towards a weakening yen.
Mm-hmm. If you're wanting to hedge your risk against the potential for further yen gains, though, Mio, would it be a good strategy to look around in the smaller end of the pond? For example, some of the smaller cap domestically focused Japanese companies that have been working quietly in the background on their profitability.
Yeah, we think the smaller cap space is actually quite attractive very broadly. As you mentioned earlier on your show, I think the sort of buyout and overall shareholder returns side of the story is also very attractive. But one thing we've been highlighting is that a lot of the smaller cap growth tech names, they're actually seeing relatively strong performance even during this last bout of volatility. And we think that's because a lot of hedge funds, we think, got a little bit complacent in terms of shorting many of the names against, say, semiconductor exposure or something of that nature. And this was actually happening at a time when a lot of the companies were pivoting from very sort of high growth but at a high cash burn to adopting a much greater focus on profitability. And what we've been consistently saying is that because the smaller Japanese growth tech companies have always been much more focused on profitability than a lot of their overseas peers, many of them have been very focused on being close to break even, or at least being able to get to that point quite easily. So we're seeing quite a turn in terms of a lot of these companies demonstrating growing margins or turning profitable this year. And quite a large proportion of them actually are profitable, and not sort of barely break even, but even 5, 10, 20% margins. So that's quite a contrast from what you might see overseas. So that space is actually quite attractive in our view.